What's really good? What's really good? We're back at it again, part 4 of the beginner's guide slash course series. I've been starting up for the past month. This may or may not be the last one that I put out, but regardless, it's probably going to be one of the most important concepts that beginners need to understand, which will take screen time within their overall journey. But once you understand this concept, it'll open up your eyes to everything within the market. You feel what I'm saying? So what we'll be going over, which is you could already tell by the thumbnail and the title, is what we'll be going over candlesticks. So you can understand the story that they tell, so then you can get a gist of why price is pushing so vigorously in a certain direction when it comes to continuing structure by breaking structure or disrespecting structure, and understand what price is clearly seeking out based on the momentum and the story that the candles tell, especially when it comes to rejects and this, that, and the third. So then you can confidently get into trades with sniper entries, perfect entries confidently. All right. And then again, you can understand where price is clearly trying to seek, whether that's big liquidity points, gaps to fill in gaps, imbalance, et cetera, et cetera. So then you can open up your eyes and get a genuine understanding of why price is pushing so vigorously and doing this, that, and the third within the candles themselves, because they tell stories. And if you can't understand the story, then you can't understand what it's trying to do. All right. And you need to understand what it's trying to do. Therefore, you can prominently take your trades. All right. So let's get straight to it. All right, so right now we are in IWM. The only things I have marked out right now are liquidity, which I'll go over in a second when it comes to understanding candles, momentum, pressure, et cetera, et cetera. But right now, you need to understand the candles, the basis of the candles themselves, okay? Candles are a representation of price. With how big they are and how small they are, lets you know how much pressure and momentum are within them, depending on if that's sell side pressure or buy side pressure, okay? Now, looking at this candle right here, okay, we're going to be talking about the wicks and the bodies. Again, candles are a representation of price. The wicks of a candle are a representation of price where it originally was, okay? Showing you that, okay, price originally was big bullish because guess what? This wick was all the way up here. We had a really big bullish candle. And then guess what? Pushed all the way down the body. The body is a representation of where price currently is right now and is a representation of what price is being and a representation of what is being done to price currently. Okay. So seeing the body go from all the way up here, which we know price was all the way up here by the wick, getting pushed all the way down here. That means we had tons of sell side pressure within this area, shoving this candle from all the way up here, all the way down to here. Okay. And yeah, okay. So the moment you understand the basis of the candle bodies and the wicks, now we can go into more in detail things. But again, the candles represent price. The wicks represent where price currently was, originally was, and then the bodies represent what is being done to price currently. Okay. Going into the buy side pressure and the momentum. All right. So buy side pressure and momentum within the candles will give you a gist of what price is doing, okay? And what price is trying to seek out clearly based on the pressure and the momentum within the candle. These big bullish candles let you know there is tons of buy side pressure and buy side momentum, pushing price all the way up here with these big drastic candles, okay? Compared to this bullish candle over here, it's really small. This is an indecision candle. It's really small. It's losing momentum, which is why price eventually ended up coming down a little bit. Okay. All right. So once you observe the pressure within a candle based on the body and then compare it to the wick, you can get a gist of where price is currently trying to seek. And this is when you need to have everything marked out. You need to make sure you have your blind spots marked out. You need to make sure you have all your POI zones marked out, liquidity, market open gaps, fair value gaps, supply demand, et cetera, et cetera. Because those are the things that price is going to be seeking clearly with this buy side momentum. And as we can see to the left, we have tons of liquidity on the 5-minute time frame, and these highs and lows of these candles are liquidity on like the 1-minute time frame. Okay. Now, seeing all the buy side pressure ultimately from down here gives you a gist that okay, we are clearly seeking something to the buy side to be pushing this vigorously. Which then guess what? The next candle continued to do so, taking out the first liquidity point. Now, granted, this candle did not close in a favor of a continuation to sweep out the rest of the liquidity, but guess what? This candle did. So understanding buy side pressure and momentum, seeing how vigorously this candle was pushing up before it finished all the way up here, will give you a gist of, okay, price is clearly going to be seeking out more liquidity here and here, which then eventually pulled back after forming, guess what, a fair value gap. And then guess what, it pushed up even more, sweeping out the last bit of liquidity. Okay. So going back to the beginning, the wick is the representation of where price currently was. The body is representing what price is being, what's being done to price currently, and where it's at right now. Okay. And then seeing the buy side momentum and pressure amongst POI zones like liquidity and imbalance, because those are the things that price is going to be seeking, especially market open gaps, lets you know that price is clearly trying to seek something in a certain direction. Therefore, we are going to capitalize off of that and we are going to jump in. Okay. Now, obviously, I can't replay this. Ain't nobody finna pay monthly for trading view just for a freaking replay. I'm good off of that. I can do my own manual back testing. But essentially, if you look at majority of these candles, or if you are trading currently, when you look at some of these candles, you'll see them jolt. You'll see them move very vigorously. You won't see them moving very slowly majority of the times, depending on when you're in the market. Okay. So then when this candle came up, I guarantee it, this candle was jolting like crazy. So me being visually aware and understanding of price and bodies and candles and momentum and pressure, me seeing how vigorously this candle is pushing, by the time it breaks this candle high, you know what I'm doing? I'm entering into calls. I am buying into this to take out the rest of the liquidity. And then guess what? It did have a slight little setback right here, but ultimately it filled a fair value gap. It filled it in. It rejected off of it, as we can see by the wick, which we'll go into next, which is rejections. And then guess what? It continued with even more buy side pressure, taking out the last liquidity point before, guess what? It pulled all the way back down, taking out this liquidity and tapping into this demand zone. Okay. So we're going to go run it back really quickly. All right. Candles, the bodies, and the wick. Those are what consist of the candles. The wicks are a representation of where price currently was, letting you know that we did have tons of buy side pressure or we did have tons of sell side pressure. But then ultimately looking at the body, telling us where price is currently and what's being done to price. This lets us know that even though we had so much buy side pressure, sellers came in or buyers came in, pushing price all the way down or all the way up. Okay. And then looking at the momentum of the candles, watching them jolt in a certain direction when there's clearly big liquidity points or liquidity and inbounds for price to fill amongst structure, because currently we do have lower time frame structure to the buy side. This gives you a gist and an understanding that, okay, we are clearly seeking something above, and we were clearly seeking something above. By the time it gave you this big bullish candle and started breaking these highs over here, that's going to let you know that, okay, especially this higher high, because this is ultimately a break of structure at that point. This lets you know that, okay, we are clearly seeking something to the buy side. And it took out the first liquidity point, it shoved down. Ultimately, you shouldn't have jumped in by that time, okay? But let's say you did. Guess what? You could have confidently held into the trade, because guess what? This candle ended up jolting like crazy before it broke that high point. And then guess what? It jolted even more, finishing all the way up here, taking out the next two liquidity points before ultimately it continued pushing up more vigorously to fill in the last liquidity point. Okay. So again, if you do not understand how candles work, if you don't understand the wicks and the bodies and the buy side pressure and momentum, this move, you would have missed it. Matter of fact, you probably would have jumped in all the way up here, being like filling your mind with FOMO, thinking, oh my gosh, I'm going to miss the move. I'm going to miss the move. When if you just understood candles, buy side pressure, momentum, the wicks and the body, you could have easily got into this trade by the time it at least broke this high point. Because guess what? The market seeks liquidity and it seeks balance. Therefore, when there is liquidity and imbalance that needs to be filled in or taken out, and you see price pushing super vigorously in a certain direction, especially when there's tons of liquidity or imbalance to be filled in, you can bet your behind that price is definitely going to be trying to seek that out to a certain extent. Okay. Not every time price will seek out every single liquidity point. But in this case, with all this buy side pressure and ultimately the continuation with the retest of rejects within the POI zones, price clearly continued seeking upwards. Okay. And understanding candles and understanding buy side pressure momentum, you would have saw the joltiness and the vigorous movements within this candle before it even broke this candle's high. And you could have got into it over here. Stop loss, we'll say in between that little fair value gap down here. Okay, you could have easily took it at that first liquidity point, or you could have took it all the way up here, almost a 1-to-7 RR, Honestly, you probably could have. I would have trailed my stop and put it in the break even by this low point after price resets and rejected within the fair value gap. Guess what? Now you have no risk with this trade, whether it loses or not. And then guess what? Boom, all the way up. Shmoney, schmickles from this move. This wasn't a terrible entry. This is actually, honestly, one of the better entries within this overall direction because there weren't that many POI zones for price to retest in. But guess what? We understand candles. We understand buy side pressure momentum. Therefore, we capitalized off of this vigorous movement. We jumped in. We bought calls. Honestly, with depending on the delta, you probably could have got out at the end of this candle. You already would have been up a crap ton of money. But guess what? You want to hold it longer? That's okay. Because guess what? Boom, ripped all the way through. This wasn't me looking at structure. I didn't even have to look at structure. I didn't look at structure. There were no POI zones I was paying attention to. Let's say you missed this candle, then you could have got in over here essentially. But ultimately, understanding candles, I got the gist of, and ultimately, yes, there was minor structure in the lower time frame. We are clearly seeking something to the buy side. For price to be pushing this vigorously, we have to be seeking something in that direction. Clearly, because this is clear as day market manipulation. Candles do not move this drastically unless it's market open or news comes out. Meaning, this is a manipulated candle pushing price in a certain direction to ultimately take out people's stop losses to the left side, sweep liquidity, get money to ultimately fuel this big old reversal to the right side. Okay. Now, the next thing that goes into candles, understanding the buy side pressure and this, that, and the third, are going to be POI zones. If you do not know how to mark out properly POI zones, I have multiple videos, especially within this beginner guys series that goes over supply demand. I even have a video from when I first started YouTube on support and resistance, if you prefer to trade that. Market open gaps, if you do trade stocks, you got market open gaps, supply demand, fair value gaps, et cetera, et cetera. You need to understand how to mark them out properly because that's going to be another thing amongst many things that's going to let you know why price is pushing so vigorously, what price is seeking, and what's adding into the buy side pressure. Okay. So, like I mentioned here, we understand how to mark out fair value gaps. It's a 3 candle segment. Whenever there's a gap within here, instead of it being filled in with wicks like over here, that lets you know that, hey, we have an imbalance. Boom, we mark that out. That is your fair value gap. And then guess what? Price eventually retested within it, rejected, letting us know that price after the rejection, because price originally was bearish as crap. And then guess what? Based on the body and the wick above, we were able to push price all the way up here. Because, and how I understand that and how I know that is because bearish candles open above and we close at the bottom. Meaning we opened down here. We most likely came down here first and then boom, pushed all the way up before price ended up coming back down within the middle and then finishing all the way through. Okay. So marking out this POI zone, you could see the clear as day rejection within there. And within that rejection, you saw tons of buy side pressure, pushing price originally all the way up here before it closed within the middle, letting you know that we have a strong rejection based on the wick. Look at the wick length compared to the body. Look at the distance, the rejection within a strong POI zone. That lets you know that, hey, we have buy side pressure. We have buy side momentum. And then guess what? We're not done taking out all the liquidity above. Therefore, by that point, if you want to be safe and wait for the next candle, you could get in maybe around here-ish. Honestly, with this rejection, how strong it was, I'd say the safest bet probably would have been maybe in the middle. Boom, stop loss on the wick because you never want to enter immediately off of rejection. And then you could have just took that entire candle all the way to the liquidity point, just like that. Me personally, rejection, momentum within the candle. The moment I see a color flip, the moment I see tons of buy side pressure, vigorous buy side pressure, and a continuation to take out, guess what? More POI zones above liquidity, what the market seeks out. Yeah, you best believe I'm going to jump into this trade latest by this open of this candle and or latest by the open of this candle waiting for the buy side pressure. So maybe around like here-ish by the break of this high maybe. And then guess what? Take it all the way to the next liquidity point. Just like that. Okay, let's say you missed on the first move, catching it from here all the way up here, or catching it from here to here, or catching the retest to all the way up there. Guess what? Price came and retested again, respecting the fair value gap, fully filling it in. And then guess what? Look at the wick and look at the body. Price was big bearish all the way down here. Previous history. This is a wick showing us where price originally was. And then guess what? The body showing us what price is what's being done to price currently and what's being done within the candle body, which is it's being shoved all the way up. Meaning, by that time, I probably would have got in maybe around here-ish. If you want to be safer, you could wait for the break of the high. We'll just say you got in midway. Stop loss will put it below that low point, and then you could take it to maybe there was more liquidity to the left I just didn't see. Yeah, we still got minor 1 hour, I'm sorry, 1 minute liquidity points all the way up here that price was clearly seeking out. Boom, 1 to 3, just like that. Okay. And there was a fair value gap. So if you wanted to be safer, you could have waited for the inverse of this fair value gap. You could have waited for the retest within that candle, the rejection, got into it, stop loss probably about midway, and then same TP point, which is still a 1 to 3 RR. Still a beautiful trade. Still schmunyan. Still schmickles. Okay. Now, another POI zone within the area was this demand zone. We had that big bullish candle. We had a smaller candle previously. And then guess what? Amongst the fair value gap, price tapped into that. Now look at the rejection from the wick compared to that instead of midway with the break, but still respected fair value gap. Price tapped into it. Boom. Rejected strongly. So you best believe there being a supply to demand zone, there being a fair value gap, seeing this strong rejection, and there's still being tons of liquidity above and price clearly seeking something to the buy side amongst the minor structure on the lower time frame. Yeah, you best believe we're getting into that and we're taking it all the way up here. Okay. Um and yeah, and then we'll go into one more POI zone before we run everything back just to make sure everyone gets a gist of what I'm talking about. All right. And maybe reiterate and add on to a couple of things that I may have mistakenly said or not said properly. But as we can see here, we have a market open gap. Now, market open gaps are probably, when I first started trading these, were probably one of the most confusing things to trade off of. But when you understand it, by understanding the candles, you can prominently trade off of these every single time. In this case, matter of fact, this trade was signaled in my Discord completely for free. It gave us 104% within 8 minutes. This was a trade I think I signaled either Monday or Tuesday, maybe Wednesday. I think it was Tuesday or Wednesday. As you can see here, price dipped within the gap. And then guess what? We had big bullish candle based on the wick, and then price shoved it all the way down. The wick shows us where price was originally. The body shows us what's being done to price currently with the sell side pressure. Next candle, dumped. Big bearish candle. And then next candle, dumped again. Another big bearish candle. Now, within this move, considering it was just market open, it wouldn't be safe to enter off the breakout of this gap. But let's say you did. Okay, that's perfectly fine. Because guess what? Price within the gap also formed a fair value gap, which price, guess what? Retested again. Boom. We'll change the color of that real quick. And then boom. Could have tightened up your stop loss by that point. Could have put it up by that high point. This is a 1 to 7 RR. Take it all the way down to whatever. Boom. 1 to 14. Now, this was the trade that I signaled within my Discord. And what I did was, I'll even put up the screenshots. But essentially what we did was we waited for the breakout. We waited for the pullback and the retest within this fair value gap. Once it showed the sell side pressure, especially within the next candle, yeah, you best believe we got in around here. Stop loss was above that high point, and we took it all the way down to the higher low, to where price formed another higher low. I'm sorry, where price formed another lower low, which I believe was around here. Yeah, because it wasn't that long of a trade. It was like a 1 to 3 RR, I believe. And yeah, we just took it all the way down to there. Okay. Now, understanding candles and understanding buy side pressure momentum, especially off of rejections and POI zones, I was able to see the buy side pressure that came within this candle. Because guess what? The wick is all the way up here. We originally had a big bullish candle, and then seeing price shove it all the way down after tapping not only into the gap, but also the fair value gap, that strong over rejection, and price already having sell side structure, tons of liquidity to take out below. And ultimately, again, with the retest and rejects within the POI zones, and then ultimately the sell side pressure momentum to continue structure, et cetera, et cetera. You best believe I am taking this trade and I'm taking it all the way down. Most people will see this and be like, oh no. Most people will see this and get in too early. Most people will see this market open candle and they'll immediately jump into the buy side. You need to be patient and you need to wait. And you need to ultimately observe the candles. Observe the candles. Over here, market open. Boom, we had a big bullish candle. This isn't the market open candle, this is the candle after. And then guess what? Price shoved it all the way down. Now, the safest thing would have been to get in immediately, but let this have been longer in the day. Yeah, this would have been a beautiful rejection to get into because we can expect more sell side displacement, essentially. But guess what? Price retested the gap again. This would have been the safest time to get in ultimately with all that. Wait for the sell side pressure to kick in. I probably would have got in probably by either the break of the wick high, break of the candle body high, or about midway, because this is around the area where price is going to show you the most vigorousness and viciousness within its overall momentum, and to take it all the way down to guess what? The gap below. Boom. Price retested it again. Tons of sell side pressure, but this was FOMC, and well, yeah, I could scroll for freaking days. That's how much it dumped down. Like, holy crap. I had some people make a bag off of that. I was so close to entering off of that, but I was like, I didn't want to get caught with the IV crush, which I was learning about recently. And yeah, so we're going to do a little run back of everything. Okay. The candles consist of the wick and the body. The wick tells you where price originally was, where price originally was able to get to, and the body shows you what's being done to price currently with the buy side pressure or sell side pressure, whether that's within a rejection or a continuation. Okay. Momentum within the candle lets you know what price is most likely going to continue to do based on structure, based on rejections of a POI zone, and based on price seeking imbalance or seeking liquidity. Okay. In this case, we were clearly seeking liquidity, and there was tons of liquidity for price to take out. Amongst the buy side pressure within this overall arrangement, price most likely forming a lower high because IWM has been sell side structure for like a month or two now. So price is most likely forming a lower high. Lower high, which is why we have this buy side structure on the lower time frame. To continue that, sell side structure on the higher time frame. So amongst the momentum within the candles, amongst the buy side pressure within these candles, amongst structure, understanding structure, and then understanding candles on their own and being able to prominently mark out correct liquidity levels in POI zones, could have taken this move all the way up. Beautiful move, beautiful trade. I already showed you 3 different examples within this overall like 30 minutes. Could have took this all the way up here, made a bag. He could have took this all the way up here, made a bag. He could have took it from down here, up here, made a bag. You could have took it from all the way down here, and then all the way up there, made a bag. Okay, and that's strictly just from understanding candles. Okay, so I already mentioned the candles with the wicks and the bodies. Going into momentum and pressure again. Look at the body compared to the wick. Okay, this body is significantly bigger than the wicks. Okay, meaning we have tons of pressure within, in this case, buy side pressure. Okay. Compared to over here, the wick and the bodies of these, we have bigger wicks than bodies, meaning we have pressure on both ends, which is why this is an indecision candle, a doji candle, letting you know there could be a possible reversal, which is why price ended up pulling back a little bit and pulling back a little bit steeper before it continued a little bit further upwards. Okay. And then POI zones when it comes to rejections. Again, rejections are just a clearer way of observing why price is acting a certain way. So there being a demand zone and a fair value gap within this area amongst structure and amongst pressure compared to the wick to the body, I can see that we have tons of buy side pressure within the area because we were originally big bullish, big bearish, and then we flipped all the way to big bullish by pushing price all the way up here and then continuing that to take out even more liquidity above. Okay. And yeah, so that's ultimately just candles. The moment you can understand candles, the wicks, the bodies, the momentum, the pressure, POI zones, and projections off of those, adding into more confluences within pressure and momentum within the candle, and then you are able to prominently mark out POI zones that price will seek out. So market open gaps, liquidity, and imbalance. Then every time you see price doing a certain arrangement within a certain structure basis, especially when there's liquidity, imbalance, and gaps to fill in, you best believe that these are the stories and the signs the candles are telling that, hey, stop being stupid. Open your eyes. We are clearly seeking something in this direction. These big bullish candles let you know that we are clearly seeking something in that direction. In this case, it was liquidity. All right. Down here, we were clearly seeking something down here, which was to continue structure by taking out liquidity by forming another lower low, filling an even imbalance, most likely to the left side, and this, that, and the third. Simple as that. Understand candles. If you can understand candles and the stories that they tell, you can understand why price is doing certain things, why price is moving so sluggishly, so viciously, why price has these big wicks, why price has these big bodies, and ultimately add that into your confluences of structure, liquidity, imbalance, and gaps to let you know and understand that price is clearly seeking this out. Over here, we had buy side pressure. We were taking out these highs and lows. Price rejected over here. With how much, not that much buy side pressure, but with this whole buy side arrangement and some of these bigger candles and the rejection off of this candle in this overall direction, we were clearly seeking to fill in the gap once more. Okay. I can't say that much over here because this is just market open. But yeah, so again, understand candles. They tell stories. And if you can understand the story with an overall arrangement of structure, POI zones, buy side pressure, momentum, and you can understand the basis of candles, then you can understand why price and where price is clearly seeking to go. Okay. And yeah, that is candles for you. That was me going over the basis of candles with the wicks and the bodies, what story it tells you, amongst other confluences like structure, price continuing structure, price looking to disrespect structure, liquidity for price to take out, gaps to fill in, whether that's fair value gaps or market open gaps. It all ties in together. You need to understand the story that price is showing you based off the candles and everything else around, okay? That's one thing I'm super big on is self-awareness, not only within your own self, but within everything when it comes to trading. If you cannot be self-aware of everything, including yourself, your mindset, but right now we're talking about the charts. If you cannot be self-aware of what price is doing, why price is currently acting a certain way, then you will not be able to understand what price is seeking, what price is looking to seek to continue, what price is looking to seek to take out and fill in. You feel what I'm saying? I showed you multiple trade examples. You could have bought contract after contract after contract and made a bag after bag after bag by simply understanding candles, momentum, pressure, the wicks, the bodies, POI zones, and rejections off of those POI zones, adding more confluences into pressure, momentum, the wicks, the bodies. You have to understand the candles. If you cannot understand the candles, then you cannot understand the overall story and arrangement within the charts, okay? So hope this video was helpful. This may or may not be the last one. If not, or if so, doesn't matter. My Discord is free. My mentorship is free. So you can always DM me. All that stuff's in the link in the bio. If you want to join the Discord, Instagram, whatever, you can DM me personally. If you want a better teaching process or one-on-one process within everything I've gone over within this beginner series, regardless if this is the last video or not, I do it for free. Just DM me. Go join the Discord. It's free. Everything in there is free. Same with anything and everything I do as a man of God, wanting to help and serve others. God bless y'all. I'm just trying to help some people out. I'll see y'all.